Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock, with news that equity markets are in turmoil over the future of trade talks between the US and China. But some economic data elsewhere is encouragingly positive. However, Wall Street has opened the week sharply lower as investors react to the US threats to a US-China trade reconciliation. The S&P 500 is down 0.4% in afternoon trade, although it opened even lower. Overnight, European markets were down more than 1% on the news. And yesterday, Tokyo was down 0.2%, Hong Kong was down 2.9%, and Shanghai was down an eye-popping 5.6% at their close. That is the biggest one-day drop in more than 3 years there. The latest PMI assessment of China's services sector shows one that has little change in April from March, expanding at a good rate. But clearly May has brought new risks. And the Chinese government has not yet reacted to the Trump tweet threats, planning to continue talks with the US. And China's central bank has cut its reserve ratio requirement for SME lending to 8% from 13.5% for most other lending. They hope it will add as much as $65 billion in stimulus support to help cover the bumps in the road while the trade tussle with the US plays out. In the US, there is something new. A Fed official saying that there will be at least one rate hike in 2019 and another next year. It seemed that recent events had taken these off the table, but apparently it's not so. In Canada, a quite different report from Toronto and the housing market from the very downbeat Vancouver one. Toronto is reporting a strong rebound in sales, up an impressive 17% year-on-year in April. Prices are rising again as well. In Europe too, small signs of optimism. Their services PMIs came in slightly better than expected, and a well-watched investor and confidence survey was very positive. Indonesia, however, is reporting sharply lower growth at the rate of just 5% in the first quarter of 2019. Investment dropped ahead of elections, and consumer spending failed to sustain their growth momentum, which was expected to run at a 7% rate. US Treasury 10-year yield is now at 2.5%, and that's 3 basis points lower in trading so far today. Gold is up $2 to $1,281 an ounce. US oil prices a little change today, but with a firmer tone, now just over $62 a barrel, while the Brent benchmark is just over $71 a barrel. And the Kiwi dollar will start today a little softer at 66.1 US cents, under the expected pressure from the wobbly US-China trade situation. On the cross rates, we're lower at 94.4 Aussie cents, and against the euro, we're at 59 euro cents. That puts the TWI down to 70.9. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.